PhD, for giving us those details. Mitul Shah is now joining in to give us his to make sense of what happened yesterday and how we should be reading into Tata Motors. Mitul, good to have you on board. Naturally, the stock took a brunt, but we were just talking about now what this means for the company's long-term plans, the vision that N. Chandra has as well with respect to lowering their overall debt, the FCF generation as well. All of that now seems to get extended. At a time like this, do you think that the stock is looking ripe at the current valuations, at the current price?
Yeah, stock is looking attractive at current valuation. As you earlier pointed out rightly, that this semiconductor issue is not a structural problem for either for company or for even industry. It is a temporary phenomena of 1 or 2 quarter issue, and not only JLR management, all the global giants are indicating that it would get resorted out in next 1 or 2 quarter. So even if you assume some delay in recovery of this, probably instead of October, this issue may get sorted out by say November, December. So broadly speaking, FY23 would not get any impact of this problem for any of the players. And from that perspective, as we investor always look at 1 year, 2 year forward earnings. So our as well as street estimate for FY23 and 24 is not changing. Stock has already corrected well yesterday, which captured the negativity related to the yesterday's announcement. So any further decline provides a decent room for upside and provide a buying opportunity for investors.
Okay. Do you believe, though, that Mitul, long term, that a lot of the structural capacity issues are likely to be resolved, or this is going to be a lingering issue for Tata Motors?
So this issue is a purely near term, which is also visible for Q1 and Q2 hint guidance given by the management. In fact, we would say that management has become more proactive in terms of updating investors, and this is the time when company proactively is hinting us that there would be a loss in Q1 and Q2 compared to the earlier years where this type of practice was not there. But in terms of a long-term parameter, it doesn't change. In fact, if you study deeply, company has sold much lower wholesale volume of JLR compared to retail in Q1. So there is a sizable inventory reduction in Q1, which would happen in Q2 also. So on the other hand, company's balance sheet would become slightly stronger by reducing inventory, by selling more wholesale volumes due to production constraint. So going forward, working capital become slightly favorable for them because of this phenomena. And FY23, 24, all these parameters will support the overall financials of the company.
Right, Mitul, thanks very much for joining in with your assessment of what the news for Tata Motors means. The stock taking quite a hammering in trade yesterday. We'll slip into a quick break right here on the show. Be right back as we have lots lined up. In fact, we